The markets rallied during a short trading week. Has the bottom been put in, and is this the start of the recovery? This is the Civil Reports Weekly Review, where we take a look at the headlines that move the markets during the week and all things investment related. Trading started with a bang on Monday. The Dow, S&P 500, and NASDAQ all gained 7% on the day. The Dow closed up 1,600 points, the S&P closed up 175 points, and the NASDAQ closed up 540 points. Investors were optimistic on the news that the spread of the coronavirus was slowing in places like New York, France, and Spain, but it wasn't all roses and big gains on Monday. On Sunday, U.S. Surgeon General Vice Admiral Jerome Adams told Fox News that the coming week is going to be the hardest and saddest week of most Americans' lives, and also stated it could be our Pearl Harbor moment. British Prime Minister Boris Johnson, who we reported contracted the virus last week, was moved into ICU on Monday to treat its condition. JP Morgan Chase CEO Jamie Dimon warned that 2020 earnings will be down meaningfully and that his company would consider suspending dividends should the economy shrink by 35% and unemployment rise to 14%. JP Morgan pays an annual dividend of $3.60 per share. The Fed announced on Monday it will start buying the commercial paper issued by corporations, banks, and municipalities that have struggled to raise cash in an attempt to backstop the economy. Also, Wayfair stock jumped 41% after the company reported seeing strong sales in its home office products during the coronavirus outbreak. SeaWorld CEO Sergio Rivera resigned on Monday, citing a disagreement with the board, the same thing his predecessor resigned for. Rivera was on the job for 5 months and was SeaWorld's third CEO in 2 years. On Tuesday, the markets experienced a wild swing. The Dow traded up as much as 900 points but closed down on the day. The Dow closed down 26 points, the S&P closed down 4 points, and the NASDAQ closed down 25 points. In news that moved the markets, AT&T announced it secured a $5.5 billion loan to give the company some financial flexibility during the coronavirus crisis. Luckin Coffee halted trading. An investment company controlled by Luckin chairman Charles Liu defaulted on a $518 million margin loan, where 515 million Class B shares and 95 million Class A shares in Luckin were pledged as collateral, and Goldman Sachs sought an enforcement action. An investment in StarBucks is looking better every day. Muddy Waters Capital, the firm that initially discussed Luckin Coffee's fraudulent numbers and made a huge profit from shorting the stock, moved on another company out of China. Muddy Waters Capital alleges that the Chinese Netflix, IQiy, inflated its 2019 numbers. 3M and the Trump administration came to an agreement over mask production on Tuesday. Under the agreement, 3M will import 166 million masks from its China manufacturing facilities by June to supplement the 35 million masks the company makes in the U.S. Last week, the Trump administration accused 3M of prioritizing the sale of masks to other countries over the U.S. government. In earnings news, Levi Strauss reported an EPS beat by 5 cents and a revenue beat by $50 million. Levi reported that revenue was up 5% in Q1, but the unrest in Hong Kong and the coronavirus outbreak had a negative impact on revenue. On Wednesday, the Dow closed up 779 points, the S&P closed up 90 points, and the NASDAQ closed up 203 points. Investors were optimistic that social distancing efforts could end sooner than later. The Trump administration expressed a desire to begin reopening parts of the economy that have been shut down to limit the spread of the coronavirus. But Dr. Fauci noted on a podcast with the Wall Street Journal that a path isn't clear yet. Market participants also used the news of Bernie Sanders suspending his bid for the presidency as fuel to buy stocks on Wednesday. Many investors viewed Sanders' ideology as a threat to current markets. Amazon announced it will suspend its delivery service so it can focus on its own packages. Investors bought up UPS and FedEx on the news. Both stocks have been down big since Amazon started expanding its delivery business. StarBucks announced adjusted earnings of 28 to 32 cents, which is roughly half of what the company reported a year ago. The company stated the cut to earnings was due to the spread of the coronavirus in the US and China. On Thursday, the markets continued to move up, with the Dow closing up 285 points, the S&P closing up 39 points, and the NASDAQ closing up 62 points. Since the March 23rd low, the Dow is up 25%, the S&P is up 22%, and the NASDAQ is up 18%. Also on Thursday, the Federal Reserve announced $2 trillion of additional stimulus. The Fed will provide $600 billion of support for mid-sized businesses and $500 billion for states, counties, and cities. The Fed is pulling out all the stops to ensure a V-shaped recovery when the economy is given the all-clear to resume business as usual. Unemployment numbers continue to increase. Jobless claims hit 6.6 million for the week ending April 4th, well over economists' expectations of 5.5 million. 16.5 million people have filed an unemployment claim over the past 3 weeks. Russia and OPEC came to an agreement on Thursday to cut oil production. The news didn't do much to help crude oil prices, though. And the number of deaths from the coronavirus in New York State set a record for the third straight day, which has caused some analysts to question, is the current market rally sustainable if places like New York are still seeing the number of deaths related to the coronavirus rising? The main question that investors and traders are struggling with is this rally sustainable? Looking at a chart of the Dow Jones Industrial Average, we see this drop and V-shaped recovery from late 2018, where that market bottom was considered support at the time. Now in 2020, the market bottomed out on March 23rd and it's traded into that level that acted as support back in 2018. The markets traded around that area and eventually broke through. That level was considered an important level because it catapulted the markets in 2019. Some investors and traders were expecting that level to be major resistance for the markets and that markets would trade back down and retest the lows from March 23rd, but it hasn't happened. But slightly above where the market is now, there's another level of resistance that served as support back in 2019 and could be the level of resistance that sends the markets heading back down. But it should be noted, markets don't always retest the bottom. A look at the Dow from the Great Recession, once the market bottomed in March 2009, it was off and never retested that level again. On Friday, the markets were closed in observance of Good Friday. And in the short week, the Dow, S&P 500, and NASDAQ all closed up on the week. In crypto news, Bitcoin traded up on the week, BTC was up 2% on the week and closed our week trading at $6,878. Ethereum was trading at $157.32, up 11% from last week. Litecoin was trading at $42.08, up 4% from last week, and Ripple was up a penny from last week. Crude oil closed the week out at $23.19 per barrel, down almost 20% from last week's close. Even with the agreement to cut oil production, there's still a large supply of oil and a lack of demand due to the stay-at-home orders around the globe. A big winner for the week was Autoliv. ALV, the world's largest producer of airbags, saw its stock price increase 42% on the week after suspending dividend, using their available credit line, and withdrawing their 2020 outlook. A big loser for the week was Microsector's US Big Banks Index, BNKD, the ETF that's designed to profit when banking stocks don't perform well, lost 51% of its value as banking stocks and the rest of the markets recovered. But if after looking over the charts and you think that the markets will retest the bottom, this may be the thing that you want to be in come next week. That's a wrap for this week's market review. If you want to dig deeper into the headlines we covered, the links to the stories are in the description below. And a link to sign up to our weekend article in Focus is also in the description below. If you're ready to get serious about investing and creating wealth for yourself and your family, check out our quarterly newsletter, The Civil Report. Serious investment ideas presented in a way that experienced and novice investors can understand. If you're ready to master the markets, check out our newsletter at civilreport.com. Thanks again for checking out the Civil Report's market review. This channel is dedicated to anyone who wants to start investing but doesn't know how or where to start. If you have any questions, ask in the comments section. Like and subscribe, and may your next investment be your best investment. See you next week.